Hi, this is 2021 partnership creation. The trial balance is given, and these are the additional information. Salaries received and goods drawn by the partners during the year. So these good drawings is you have to deduct from the cost of sales, and then you have to debit to the current account drawings to Lal and Ravi. And then these are the salaries that the partnership already paid. So from the agreement, every partner is entitled to a monthly salary for 50,000. So which means from the appropriation account to each partner, you have to appropriate 600 per each partner. From those salaries appropriated amount, partnership already paid these amounts. So when the salary is appropriated, current account credit, and when those salaries paid in cash, so you have to debit to the current account as salaries reimbursed. But in this case, they recorded that in operating expenses. So from the operating expenses, you have to minus that. And the loan indicated in the trial balance is provided by LAL on 1st of April 2020. So which means as at opening date, you have to find out interest 5% because there is nothing given in the agreement based for additional loans, right? So you have to go with 5% interest. So our interest is 100, so that is an expense, and this total 100 you have to pay to Lal, so Lal's current account debit. And here Ravi had paid 20,000 to a trade credit of the partnership out of his personal money during the year, but this has not been recorded in the books of accounts. So trade creditors they paid, so this 20 you have to credit to the Ravi's current account, right? So that's it for agreement for in here. And then 10% opening capital balances, they are paying interest when you are appropriating interest on capitals, partner salaries, and after all, share of profit based on this ratio, right? So that's it for the current account, appropriation account, and income statement. And at the end, Ravi decided to retire from the partnership. So from the current account closing balances of Ravi, you should move to the capital account. So at that point, current account debit, capital account credit, and then you have to adjust the goodwill. So goodwill you have to always credit to the capital account based on old ratio. So old ratio is 532, and then you have to debit to the current account goodwill based on new ratio. So your new ratio given as 3 is to 2, right? And then they are asking investments 1,200, the transfer, the ownership of the investment. And then they mean Ravi is asking 300 equipment, and the remaining balance you have to transfer to the loans account, right? So that's it for this question. And after all, you have to show the balances of Lal and PL at the balance carried down.